But you don't want to be the last guy long or the last guy short, and then the market takes a break, it pauses, it is pulling back. So we have to know if the market is overbought and oversold at the time of entering. The Atlas line, when it generates the signals, tells me right away, am I entering after the fact, after this move has already happened? Yeah, Bill, that's no problem. I'll post it. Sure. So overbought, oversold before entering any trade needs to be understood. Now, the other situation that I see is that when you have a large candle here like this, you automatically think it's going to continue. And you can say the same thing about news. When there's a news event, you can say, well, it's a large move, everyone bought. But this going long after you see a large candle here, or the opposite going short, is the absolute wrong thing to do. Because after the market makes such a large move, unless there's more buyers to help propel the market up, you're entering long at an overbought situation, and now it's either going to take a little break or maybe even reverse completely down. So it's very common to see not only days, that's why I showed you a daily chart, where the market rallies big trend up, and then the very next day it gives it all back. It's the same distance that it could move, but it gives it all back. Usually they say because of profit taking, or they give another excuse. And so you have to realize that just because there's a large momentum or crosses your moving averages, or the MACD has just crossed, whatever indicator you're looking at, there's a little bit more to it than just following an indicator. You have to realize the bigger picture, and the bigger picture is there news? Is the market overbought or oversold? What are the current conditions? Is it even worth taking the trade? What's my profit target? Am I going to hold on to this trade for more than 20 minutes on a 5-minute chart, or am I going to hold on to this indefinitely with hope? I hope it goes in my favor. It's eventually going to have to turn. Looks like it's going to happen. I always try to avoid words like that. So know if the market's overbought or oversold right at the time of entry. The ATR will save you from that type of a situation. Okay. Now, in addition to looking at overbought, oversold, in addition to holding on to a trade for a maximum of 4 candles, knowing if the ATR is normal or if it's slower than normal or more volatile, there's more to it even than that, because you can enter any time, but it's a gamble. It's 50% up or 50% down, or it's 50% up or 50% down. So we have to take it a step further. Why do the entries happen? Why are we going long? Give me a reason. So anytime you take a trade long, or take a trade short, or take a trade that is about to give you a move, there has to be a reason. Why are we doing this? So next comes the actual method and details and signal itself. If I'm going long the market, it has to be because I believe that there's going to be more buyers that are going to propel it forward. So what's my reason? Well, there's a couple of different ways that we can approach this. We can look at counter trend trading. We can look at breakouts. We can look at markets that are in a channel, and you're maybe trading the channel where every time it hits resistance, you sell. Every time it hits support, you buy. So there is a reason, right, why we enter long or short. For those of you who are experienced, you know what I'm referring to. How can we formulate a plan now to go long or short? Well, we have to know if manipulation exists in the market, because manipulation will tell me that the market is moving higher and higher and higher, and then all of a sudden it just stops. We have to know where this manipulation exists in order for us to stay out of that manipulated area. Now, I teach manipulation probably the most unique way and different way than anyone, because manipulation absolutely exists. And to give you an example, not only is this here overbought because this signal on the Atlas line was generated beyond where the overbought oversold conditions would have made it acceptable, but why would the market just stop here at 21.01 2150 or 2102 or 2101. Why would it stop there? Well, if you did not know where manipulation happens or why it happens, then you would jump in long and the market would just run you over. So the big question is, how can I know that this is going to happen, and how can I enter short on a counter trend move based on manipulation? Well, there's a few manipulated things that happen in the E-mini S&P that are very unique, extremely unique. If you look at how the market moves, the market will move in increments, and when these increments have been fulfilled, for example, you're a professional trader managing grandma's money, and you're buying and you're buying and you're buying and you're buying, and you've actually accumulated over and over and over again a certain amount. And then you say to yourself, I'm going to take profit. If you don't know where these large traders are about to take profit, this outside influence of selling the market to take a profit will run you over. So when you enter a trade, we have to know if it's happening at a manipulated area where these traders are about to take profit, because as soon as they take profit, they're going to overrun everyone, the little guy, you and I, to the downside or to the upside. So this has to be known in advance. Should I go long? So we can forget about the fact that if it's overbought or oversold to begin with. Can I go long or can I go short knowing that it's not at an area where the market's going to be manipulated? And manipulated, the way that I'm referring to it, is profit taking. When these traders enter into this market here, they're buying slowly. They're buying and accumulated and buying and buying and buying. And then when they exit, they're not really exiting in the same way they entered. They're exiting in a more forced manner in order to get out of the trade as soon and as fast as possible. So if they've accumulated thousands of contracts and it's time to get out, they're not going to exit the market in an hour. They're going to say, let me get out of this as fast as possible. And what they do is they, on a dime, overpower and overrun everyone. So we have to know where this manipulation exists in order to avoid it. If this long trade was not overbought, right? And if it was happening at an area where they are just about to take profit because they've been accumulating, you have to say, this trade is not worth taking. The risk is too much, because as soon as I go long, they're all going to get out of their long position and sell and overrun the little people, you and I. So this has to be known in advance. Now, I also believe that entering at a better price is worth it, because after you have a large candle here, like this, then you're going long into the unknown. So another aspect of what I show and what I teach is that entering long into the unknown, into uncharted waters, is always a bad idea. If I know that the market has made this high, why can't I go long leading up to where the market has just been, as opposed to going long here into uncharted waters? So let me show you here what I mean by that. Let me just remove here everything off the chart. And let me show you here a situation where, for example, here you see these larger than normal red candles. If your moving average says go short, or your momentum, or any type of indicator, then you could say, I'm going short because I can see the market's about to continue. But remember, here are the things that you have to start off with. Is it overbought or is it oversold? And if it's not overbought or oversold, can I go short? And will the market still continue? What's my risk? And immediately the market reversed. So there's profit taking that happens whether it's to the short side or to the long side, that has to be expected. Larger than normal candles do not immediately mean it's going to continue. As a matter of fact, the opposite is typically more true than you would expect. If you have this large red candle here, just giving you some recent examples, you can expect the market to continue lower. But you see, it didn't, because somebody took profit there. Or else, if everyone was on the bandwagon to sell, it would continue. The same thing with this candle. Larger than normal, you expect that there be a situation where it will continue. Look at all these buyers, right? They're all stepping in, and then it didn't. So don't expect that a large candle, red or green, immediately means that it will continue. It typically doesn't. So I'm more concerned about this overbought, oversold criteria and knowing whether or not taking that long or short trade is even worth it. Let me show you a few more examples of that. Here's a large green candle, and then it stopped. Here's a large green candle again, and then it stopped. Here's a large red candle here, and then immediately after it, there's a pop. So your moving averages finally kick in, you're going short, everything looks good, right? What can go wrong? And then that happens. We have to know that this is more common than you believe. So why would I go short knowing that this may be an area of manipulation? Why would I go short there if this is an area where it's oversold? All these things have to be known in advance. Now, for those of you who have followed me, those of you who have the Trade Scalper, even those of you who are in the mentorship here class, I see a few names. Can you give me a reason why I shouldn't go short here? What do you think? What would be the reason not to go short here? If you see this candle, who knows? Very good. Very good. The X5 trade. Excellent. So here is an area where the market is expected to reverse, and it did. So if I know in advance that there's manipulation about to happen, skip the trade. Don't take the trade. You don't have to take every single trade. Just skip the trade. Now, I see here a possible Atlas line trade. I'm going to show it to you. See if I can trade it as well. And so let me put back the Atlas line and also bring up the scalper. And if two consecutive candles close below the Atlas line, it's a short signal. If this candle bounces off the Atlas line, there's a long signal. So we'll give it a few minutes to see what happens here. And let me pull up the scalper as well. So give me just a second here. Okay, so on the left side here, this is the trade scalper here. On the right side is the Atlas line. You don't have to have it set up like this. I'm just showing, I want to show you both. I still have on the trade scalper the ATR because I can expect the market to move equivalent to a point, even though the scalper is usually just 2 or 3 ticks. And that really is dependent on whether or not you have at least 3 ticks or the market's slower than normal. So on the trade scalper, what I'm looking at is less than or more than, right? If this happens to be a minimum of 3 ticks, I know that 3 ticks is possible. So 3 ticks right there. If the market is less than 2 ticks, it's not tradable. If it's more than 2 ticks, but less than 3, then it's just 2 ticks, right? So again, current conditions dictate my expectations. To me, that's more important than hoping it's going to go 3, 4 points. If all the market could do is X, then X is really all I could expect. And let me bring up my dome as well. Let's take a look at this here. See how I'm going to do this. Put this maybe like this, like that. Okay, so let's do this account, and this If it closes lower than the Atlas line, you'll see a signal generated to go short. So right now it's on it, or maybe a tick above it. Bar timer, something that not a lot of people use. I think that a bar timer is essential. I need to know if the candle is actually closing and opening at a specific time. I don't want to be caught off guard. Know when these candles open and close. Add the bar timer. It's just a little something. And so let's do 5 contracts. And the ATR is 2 points, so that's looks good. All right, so I'll go short if this here happens to provide a signal in 2.5 minutes, right? Be patient, pick and choose. There's no reason for me to jump into anything or you unnecessarily. And I already know, based on what I just showed you, overbought and oversold, I already know where the market has to be within for me not to consider it oversold, right? So for those of you who attended here in the morning earlier, the ATR is 2 points. 2095 is where the market is currently on the Atlas line plot. That means that 4 points, right? Doubling the ATR, 4 points maximum would be considered oversold. If this trade triggers more than 4 points below the Atlas line, oversold. How do I know that? Double the ATR. And if it's a long trade, it's really the same thing. A long trade, if the market goes up more than 4 points, then not taking the trade. The X5 is there, absolutely. But remember, we always trade what happens first, right? If the X5 signals or if the double bar short signals, whichever happens first. So you have to be careful with the oil inventories, which is a high priority event. 11 o'clock. See what happens here. Just give it a moment to see if there's anything. The trade scalper is giving you a double bar, a double wick short to go short. So give it just a second here, about 30 seconds to see what happens. Now let me just make sure this stays on top. This here, this double wick short here that you see for the trade scalper, it's based off of these two wicks. These two wicks going short. And remember I mentioned to you that markets are better traded at better pricing as opposed to going into the unknown. I already know that the market made this low here and here, so I'm entering based off testing where the market has already been. Okay, so here is the double bar short, 2092.75. This is 2091.50, not considered oversold. So let's go ahead and sell.
Order filled.
So now I'm short 5 contracts. The ATR is 2.5 points. My target is less than that, so 2 points. I doubled the ATR. And actually, let me turn on the entries here. Show you. Okay. All right. What's the maximum amount of time to hold on to this trade? Who knows? 4 candles. Right. Very good. So I need to make the 2 points or 2.5 within the next 4 candles, which is 20 minutes. It's enough time for this market to move in my favor. What about if there's proof that this trade does not and will not continue? Well, the prove it stop is any candle that closes on the opposite side of the Atlas line. So when I look at here a closing price above the Atlas line, I already know what I'm in store for. It always has to be less than 5 points, because remember, catastrophic stop, maximum of 5 points. Also, if this distance here is more than whatever the catastrophic stop business case would be, about 4 to 5 points, you're out of the trade. There's a few things to consider before entering. I mentioned in the beginning news. I mentioned overbought, oversold. I mentioned knowing if there's manipulation. Questions, anyone? If I'm going a little bit over anyone's head, please let me know. I'll be more than happy to explain. Dijon, questions for me? Dijon? Now is news, right?